Good afternoon and welcome to our Lunch and Learn Travel Edition. Today's topic is Payment Plan Basics. My name is Dadra Driscoll. I'm a Silver Consultant with Evolution Travel. I am also an IATAN accredited agent. We're going to go over just some basic information on payment plans today. The link to this video as well as a link to the handouts will be posted in the original announcement so that you can access it as well. For the purposes of this training, Lunch and Learn is set to be something that you can view while you're on your lunch break. So for time's sake, we are going to ask that you put your questions in the chat box and we will answer them at the end of the training. So now I'll get started. My first disclaimer is that this training is not an exhaustive training on all things payment plan. It is intended to assist new agents in understanding and creating payment plans to assist their clients. It will only cover the basics of how they work and how to use them to enhance your business. So we're going to be covering when can you offer a payment plan, how do you create one, as well as using a payment plan as a selling tool for your business. So, payment plan basics. First of all, payment plans are the process of you as the agent taking multiple smaller payments from the client to add up to the package total. With a payment plan, the agent is responsible for the processing of the payment. This is different from automatic payments that are scheduled and processed by the vendors. Some vendors do offer an automatic payment option that you can select, and often these will include a soft credit inquiry in order to approve the client, and approval is not always guaranteed. So I do want you to understand those differences because some vendors do offer an automatic payment option, and that is something where you'll put in the client's information and the vendor will debit their credit card or what have you at certain intervals. So we're talking about payment plans that are processed by you as the agent. So want to make sure as a background that we do understand that main difference. So often one of the very frequent questions that I get from new agents and that I see posted by new agents is, how do I create a payment plan? And often we are starting from the position like a consumer, and we're expecting someone to already have it laid out for us. So when we're talking about payment plans being offered, these are bookings that are made well in advance, and they don't require payment in full up front. So usually we're talking about trips that are booked 90 days or more in advance. Often when you book that way, the vendor will give you a deposit date and a final payment date on the booking, and then you can create a payment plan for your client to then meet that goal in most cases. So we've got different vendors that we use. Vendors such as, Expedia, Tap, and Vax. Those are our most popular ones that we tell new agents to start with. And generally speaking, Expedia, Tap bookings require, if you're doing a package, it's going to require payment up front in most cases. Now, there are options that Expedia is putting out. They also have some automatic payment options and things. So you want to pay particular attention to the vendor you're using and what's outlined in the instructions as you're setting up the particular trip. Now, vendors such as Vax, Vacation Express, Apple Vacations, MLT, your cruise lines and things like that, they're generally, once you create a booking, they're going to give you a deposit date and they're going to then give you a final payment date, and you have some flexibility in between those dates to create your payment plan. So now we're going to talk about how do you create a payment plan. Now with this, again, as I mentioned, there's different vendors and it'll be slightly different depending on the vendor. So hang on, we are going to cover some basic differences between cruises and vacation packages in a later slide. But some things for you to consider up front as the travel agent. One is to consider the number of payments you want to accept from your client. Are you thinking about a monthly payment, bi-monthly, quarterly, weekly? Now, this is going to be contingent upon how far out they're booking. It also may be contingent upon, the amount of the booking and things of that nature. So you want to consider the approximate amount your client can afford to pay, because often, people are booking trips and maybe this is their first big ticket booking, and so they don't have all of it up front, and you want to make it manageable for them. On high cost trips, you want to also consider daily credit card limits on transactions when you're making payment plans. And I bring this particular one up because I had a few clients that are more of my high-end clients, and they were booking trips that required larger payments. So I had one particular client, their total trip was about $10,000 or so. And so she wanted to make a $3,500 payment a couple times. But the issue was her particular bank that issued her credit card, her daily spending limit was $2,500. So in that, I had to consider that. So that's just something to keep in mind if you're doing those big payment amounts. Not what we deal with most of the time, unless, of course, you have a very high-end clientele. But it is something, as a knowledgeable travel agent, you want to also consider. Because I've actually had 3 clients where I ran into them wanting to make payments that were larger than their daily credit card transaction limit. And in those situations, you can either split the payment, do one payment one day and another payment the next day, or depending upon their relationship with their bank, they can call. I had another client that simply called and explained what they were trying to do, and they gave them a temporary increase to allow me to process the payment. So the next thing we want to talk about is, this is just a basic math. So I don't want you to be afraid, because I know often people get nervous when it comes to math. But when you're creating a payment plan, one thing you're going to look at is what is the total amount of the trip minus the deposit amount they're going to pay, and then divide that by the number of payments you're going to offer. So as I mentioned, we're going to look at a couple different examples of how to do that, but this is your basic formula. So, if the total amount of the trip is $1,500 and their deposit is $300, you now have $1,200 left, and you're going to offer that to them in 4 payments. 1,200 divided by 4 means their payments would be $300. So that's just a round number that worked well for the math. But each time you do that, this is the basic formula you're going to follow. So you, as the travel agent, should also consider how you want to process it. I mentioned on the previous slide, do you want to do monthly payments, quarterly payments, or what have you? But whatever that magic number is you come up with for your client, you're going to be the one responsible for doing the processing. So be realistic with your time factor. Say you have a large group and you decide you want to take a lot of payments. That's going to be a lot of work you're going to handle. So you want to make sure you're just paying attention to those things as you go along. So now we're going to look at 2 different types of trip bookings and how to actually create a payment plan. So our first one, we're going to look at a cruise example. I did a screenshot from an actual group cruise that I did on Royal Caribbean. So if you're familiar with GoCCL, you've probably seen this particular screen. Now with GoCCL, their standard calculation, they're going to give you a deposit amount and a date, a payment amount and a date, and then a final date. So in this particular case, they were requiring a deposit on June 27th, another payment of $250 on December 13th, and the final balance to be paid off by February the 28th. So with that particular calculation, in this example, a balcony cabin based on double occupancy was going to cost $2,086.80 or $1,043.40 per person. We require a $50 deposit on this particular trip. So that meant that there was going to be $993.40 in payments that were going to need to be made. Pardon me. Now, following that standard calculation, Carnival was going to require a $250 deposit for the second payment, and then the total balance remaining paid by that final date. So in this case, that would have meant they would have paid that initial deposit, the second payment of $250, and then they would have to pay $743.40 by that February date. This could work. For some people, that would be fine. But because of the group I was working with, several of them were first-time travelers. We wanted to make the payment more manageable for them, where they weren't going to suddenly have to come up with a larger payment at the end. So in this particular case, when I did my flyer and put together my plan for the group, I adjusted how I offered the payment plan to them. Because in the case of a cruise where they give you these dates, they're simply saying is this is the amount of money that we expect to have received from you and your clients by this date. It doesn't mean that's the only amount that the client can pay. It doesn't mean that you can only submit 3 payments. So let's take a look at what we did with this particular cruise. So I decided to do 4 payments. I took that exact same cabin. I moved those dates back because I wanted to give myself a little leeway. So that first date, again, was in June that they wanted the deposit by. So I communicated to my group that I wanted their initial deposit to me by May 25th. So that actually gave me a month of leeway, but at the same time, it helped me get them started because this was a group that I started working with in April. So I gave them until May to do the initial deposit. Then what I did was the second payment, I went forward to August and asked them for $300. Then I went forward to November, asked them for another $300. And I went to the final payment date, which was February, and I moved it back just about a week or so I would have a little leeway in case people were late on that final payment. And I said that the final balance would be due. I did this particular calculation for a couple of different reasons. One, if you recall on that previous screen, I had multiple cabin types on this cruise. So I wanted to come up with a general payment plan that everybody could follow the exact same thing until that last payment. So I did 300 because the person who had the least expensive cabin category could work with that, as well as the person who had the most expensive category. So you want to always make sure that you're paying attention to those vendor due dates and that you give yourself a little processing time. So as I mentioned, I moved that February date back a couple weeks just so I could be sure that in case someone was late making a payment, that I would still have room to process it. And I also wanted to make sure that I gave myself processing time. I didn't want to be right up on the window of the date that the vendor wanted. And then if anything went wrong, I couldn't get it in by the appropriate time. It was putting pressure on me. Because one of the main things when you're doing payment plans, you want to make sure that you're creating something that's going to work for your client, but also that's going to work for you in the confines of whatever your life is like. So kind of just a quick example. I looked at what was going to be the total amount. I divided it by those 3 remaining payments, and I came up with a nice round figure for each payment of $300. And then I told them the final payment would be due on that last day, and that was going to differ depending upon what kind of category of cabin they had. But this is just, again, an example. If you have a very large group, you want to, again, set these dates and make it manageable, because if you've got 15 cabins and that's 30 people that are all going to be sending you payments to process at one time, you definitely don't want to be running up against that midnight deadline or what have you, trying to get all 30 payments processed at the last minute under the wire. So you want to always give yourself ample processing time to actually process the payments. Because with the vendors, again, depending on who they are, you may have to do it online manually. Some you may have to do it over the phone with an agent. So you just want to, again, give yourself enough time to make it manageable both for you as well as beneficial for your client. Now let's look at a vacation package example. I did a screenshot of a vacation package that I booked, because often when someone sees this, again, the vendor may give you a deposit date and then give you a final payment date. Depending on how far out they're booking, you then can look in there and create a payment plan for your client. these particular clients, they were going on a honeymoon. So the total cost for the package was $3,368.47. Their deposit was $320. So that leaves a remaining balance of $3,048.47 that needed to be paid by that March date. Now, with this particular client, one of the things that they wanted to make it manageable, they wanted to do like 3 payments so they could split it up and not have to come up with all of it at one time. So we looked at doing a November payment, then have them off for December because of holidays, make a January payment, and then make a March payment. But as you notice, again, that final payment date the vendor was requiring was March 21st. So I moved that final payment date back to March 15th, again, to give both my client and myself processing time in case something were to come up. Now, they weren't as concerned about what the exact payment was down to the cent. So I just divided that total by 3. We did, again, a November payment, which would then be $1,016.16, a January payment of that same amount, as well as that final March payment, which happened to be $1,016.15. But you want to pay attention to what's manageable for your client. Now, in some cases, perhaps it's someone who's booking a trip and they need a smaller payment. You may want to look at, do they want to make payments monthly? But you also want to pay attention to things. Like I said, in this case, because it's going past the Christmas holiday, I just chose not to ask them for a payment in December. I didn't want to be competing with toys under the tree for the kids and things of that nature. So when you're creating those payment plans, you want to look at things like that. How much time are you giving them between payments? Is it manageable? When you're doing a generic group or booking for people that you don't know, you want to just kind of create something that's going to, again, be manageable. But again, if you know who you're dealing with, I had another group, and with them, these were people that I actually knew personally. So I knew that the majority of the people going could handle what we were doing, wasn't going to be a financial strain. But I did know that there was one particular person, they basically were going on this trip by faith. So when I had a conversation with them one-on-one, what they said to me is like, look, I know that if I pay a little bit each time I get paid toward this, then I know I can get it all taken care of in time. So for that individual, I did a slightly more creative plan. I worked with them, and every time they got paid, they put something on their trip. So that was different. It wasn't the posted payment plan that I told the entire group, but it was something that I worked out with that individual so that by the posted due dates, they would have met the amounts that are done, or that were due rather. Now let's talk about using a payment plan as a selling tool. Because when you're marketing your trips and you're posting on Facebook or Instagram, if you advertise that you offer flexible payment plans or that payment plans are available, that can be attractive to people because travel is a little bit different. The general public doesn't necessarily know. So they may not realize that they could, quote unquote, lay away their vacation. You as the travel professional, when you're sharing with them, you want to let them know. Often people have those bucket list trips or those places that they've dreamed of going. And the main reason they've never gone is because they thought they couldn't afford it. You want to be able to encourage early planning so they can take advantage of this. So if they're, depending on what their budget is, if their dream trip is going to be a $5,000 trip or a $1,200 trip, really doesn't matter, but you want to give them time to reach that goal and what that number is. So as we're approaching the end of the year, at the beginning of the year, tax time, people often have a little more disposable income, so they may be more willing to book those big trips. But at other times, if you educate your clients that, hey, we can book this and then make it manageable. When we gave that example earlier, where they could make payments of $300 on the trip and still go, that could work for a lot of people to obtain those dream vacations. This is going to help them choose perhaps a little more higher end vacation. Perhaps you can add in some additional amenities, and the cost point can be a little bit higher if they realize they don't have to come up and come out of pocket with all of it all at one time. Offering that and making sure that people know when they see that you are that travel professional. That's one of the benefits of using a travel agent as opposed to just booking it themselves, is that you can help them manage and be able to purchase the vacation of their dreams and just plan it out a little bit better for them. Payment plans of this nature work for everyone, whether they have good or bad credit. Sometimes they're thinking, I can't charge my whole vacation at one time. So when you're selling it as a selling tool, when you're talking to someone, you're going to talk about the fact there are no extra fees or interest charges, no prepayment penalties. If they do come into extra money with their tax return or get a bonus at the end of the year on their job, they can pay it off at any time, but you're making it manageable for your client. So you want to make sure that when you're doing that you pay attention to those things and you use that as a selling tool. But always, again, this is going to rest on you as the travel agent. So you want to be mindful of your time and the number of clients and or payments that you'll have to process. When you're setting up a payment plan, and this is especially, again, with groups, we all have those dreams. We want that big group, but big groups require management. So again, if you're going to do a group cruise, note that 15 cabins could mean 30 people. So that could mean 30 payments at a time that you have to process. So you just want to give yourself enough time, be realistic, so that, again, you're not running up against the clock trying to get payments in before midnight and not wanting a group to cancel and things of that nature. But again, you want to pay attention to those things. Setting up a payment plan can be really easy, but it's going to require management. So as the travel professional, you also create that situation with your client where they're trusting that you're going to take care of everything for them. So that means sending out to them the credit card authorization forms and all of the things that you need, communicating clearly to them when you need it back, and then being able to send back those receipts to them. All of that makes your client more comfortable. It also makes them want to refer other people to you because they had such a great experience with you. So kind of recapping those things, a payment plan can be a great selling tool because a lot of people don't know. Now, we as travel professionals, we know. Those of us who may have traveled a lot, we may be aware that these things happen, but the general public may not. So you want to always add that extra line in. You want to indicate flexible payment plans or payment plans available because that will strike an idea or at least get the conversation started. When you're talking to your client and you're looking at where they want to go, what the cost of the trip is going to be, again, that payment plan option could be the definitive point that decides to, you know what, I can do this. If I can pay $200 a month and pay off my trip, or $300 a month, or whatever is manageable for your client based on their budget, it may in fact be that deciding factor when they're wanting to book a cruise. So just to recap on some of the things that we touched on, when you're making the payment plan, we're talking about actual payments that are going to be processed by you as the travel agent and not automatic payments that are processed through the vendor. If you're going to utilize those things, just make sure you read the fine print and you communicate that to your client, because in many cases that can include soft credit inquiries. It can also require credit approvals and things of that nature. So you just want to pay attention to that if you're offering those to your client. When you're offering those payment plans, you want to use this to help people plan further in advance. Because again, now is a great time to start booking your 2019 and even 2020 trips. There's a big announcement that was made about Disney is bringing one of its ships into New Orleans starting in February of 2020. So I've already started marketing to my clients that are in that area that, hey, let's start booking your February 2020 Disney cruise now. we can offer a payment plan. So it's going to require that you kind of be proactive too, pay attention to your calendars and help people book, because again, they can book further in advance and you can work out flexible payment plans with most of the popular vendors we use if you're paying attention to the due date and what the final payment date is, and then work backwards from there. If they've got 6 months in that payment window, perhaps you'll offer them 3 payments, a payment every other month. If they've got those same 6 months, you could offer them to make a payment every month, but that just means more processing for you. So pay particular attention to that. And then just for the sake of us being sure that for those who came in a little bit later, your basic calculation. You're going to look at the total amount for your trip, less whatever the deposit that's required, and then divide that by the number of payments you're willing to offer. So again, whether that's a monthly payment, every other month, quarterly, you can be flexible and creative depending upon what your client's ability to pay. But you just want to pay attention to what you can honestly offer them. So these slides are actually in a handout that I am going to post. So for those of you that are taking notes and things of that nature, if you want to get a copy of them, I will post the link back on Facebook in the actual announcement in the comment section so that you can download it. A copy of this training video will also be there as well. So that's payment plan basics. Again, part of our lunch and learn philosophy is to give you a training that you can do while you're on your lunch break, something that you can do with under an hour and be able to take it. So usually it's just one topic. I do them the end of each month. Now, because November, we have the holiday coming up, instead of the last Thursday, it will actually end up being most likely the third Thursday in November. But again, I thank you for submitting your questions to me, because that helps me come up with the topics that we use for our lunch and learn. So I'm going to stop the recording, and then I'm going to open up the chat box for questions in case any of you have questions about what we've discussed.